market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. Supreme Court appears skeptical of President Trump's sweeping global tariffs, as justices suggested he had overstepped his authority with his signature economic policy. Now, in a hearing yesterday, the court hinted it was ready to put significant limits on Trump's far-reaching agenda. Let's get straight to Brendan Murray, who leads our trade coverage here. I mean, Brendan, to tariff or not to tariff, I thought it'd be like a one and done or take a couple of days, but this is going to drag on for months.
Yeah, it sounds like it. So I think the main takeaway here is that the scenario where Trump is allowed to use his reciprocal tariffs with free rein is pretty much off the table. The analysts that we spoke with, the betting markets, U.S. retail stocks were reflecting the fact that the Supreme Court is going to curtail his use of these to some extent, if not completely. So now the question is, does that happen in weeks? Does it take a couple of months? And the cloud of uncertainty for companies, investors remains. So I think the main takeaway is what happens next. Are U.S. importers going to get refunds? What's going to happen to the trade deals that President Trump has negotiated? Do those have to go back to the negotiating table? So there are just a lot of questions swirling around this, and the Supreme Court is not known for speed, but this is a case that is really going to require something in the next weeks or months, or you could see some economic disruptions in the fourth quarter here and in the first quarter of next year.
And Brendan, I feel the market reaction is quite telling because they're a little bit in a wait-and-see situation. They're selling off a little bit, but they're not 100% sure whether the Trump administration find a way around it, I guess.
Yeah, exactly. They have some other options. They have these 232 cases, the 301 cases. Remember, we don't have pharmaceutical tariffs yet or semiconductor tariffs from those 232 cases. So the Trump administration could roll out a series of other kinds of authorities that they could use to put plenty of tariffs on lots of different countries. So this isn't the end of tariffs if the Supreme Court rules against President Trump. It's just going to take a different form. It's going to be slower, more methodical, something that President Trump can't just wake up one morning and without notice threaten an economy like Brazil or India, as he has with high import taxes.
As always, thank you so much, Brendan Murray there, who leads Bloomberg's trade coverage. And it was actually quite telling also to listen to the tone at which the justices talked. Now, Veolia shares on the move after the company said it expects 2025 EBITDA to be at the upper end of the company's guidance. We can speak with the chief executive of Veolia, Estelle Brachlianoff. Thank you so much for joining us, Madame Brachlianoff. As ever, give me a sense of what you're most optimistic about in the next 12 to 18 months.
You're right, a very strong set of results with, just to mention one figure, plus 8% EBIT in the 9 months. Very much, confirm our guidance. And, I really expect a very strong Q4. But beyond that, it's really a confirmation of the soundness of our strategic choices, in particular with international operation, which are proving to be a real driver, not only for top-line growth, but bottom-line growth. Basically, they grow at double speed than that of the average of the group. So the international business of Veolia is very, very strong.
What does it mean, Estelle, in terms of potential M&A? Do you see, there has been quite a lot of consolidation in your space. Do you expect that to accelerate going forward?
We've already done quite a lot this year with 2.3 billion invested M&A since the beginning of the year, mainly outside Europe and mainly in the most technological part of the business, which we call our boosters, which are hazardous waste as well as water technologies. After last year where we sold a few non-strategic assets, this year was more about reinvesting, again, in what's growing faster, not only top line, but bottom line. So very happy about the results. And, of course, this is a trend which will go on for the rest of our strategic plan, Green Up.
I know you're very much involved, of course, in the recycling of important stuff like water, like paper, like plastics. But is there a world where we could recycle some of the rarer things, like rare earths, or things that could be recycled once used?
There is a word, and the word is now. Actually, we are mining our waste, be it industrial waste like old batteries and things like that, to find new resources, and they can be rare metals. In particular, we've just opened a facility in the eastern part of France where we use old batteries to find back some lithium and cobalt and nickel. As you can imagine, it's super good, of course, for the environmental footprint, but it's super good as well for strategic autonomy, because those rare metals are absolutely critical for the world going forward. So that's a big example and testimony of why there is a very big and sustained demand for Veolia services, despite the political environmental backlash, because the demand is based on what the population is asking, what the industries are asking, which is sustained resource, secured resource, removing pollutants. And, I make the link from your question to our very strong results and our very strong future earnings as well.
Estelle, there's been a depreciation in the U.S. dollar and the Argentinian peso in recent months. At which point does it actually become problematic for Veolia?
So the Forex is not a question, and that's why we guide always as constant Forex, because simply, it has no impact on our business. We are a very multi-local business, which means that in each country, say in the US, our revenue is in dollar, but our cost base is in dollar. So there is no transaction effect for us, no impact on the business. And just a testimony to that, from the beginning of the year, we've increased by plus 50 basis points, our margin at Veolia. So I'm very happy about the achievements as well.
Estelle, when you look at the volatility that we've seen in France, how much of the political uncertainty is actually starting to hurt corporate investment in France? And so what does it mean for your plans in the country?
Just to reset the foundations here, 80% of the group is international. So it's 20% only, and even less of the earnings. Coming back to your question, the French political situation does not impact Veolia's results. For exactly the same reason I mentioned a minute ago on Forex, we are a multi-local company, so we're not dependent on public debts. We don't have any federal or national contract. We are very local. Be it to cities, to serve cities, and to serve industries. So we don't have any impact from the political uncertainty in France and in other countries of the national political situation in our group's result, as we've demonstrated in the 9 months.
Yeah, but we understand there's also new taxes that could come in France. So again, does that change how much you want to invest in the country going forward, potentially?
Even the taxes, which haven't been voted yet by the Parliament, but even if they were, it has no significant impact on Veolia's results, and I think that's an important point. So the basis and the decision on our investment are based on the future potential for growth, not on anything like a political situation.
Okay, such a pleasure to speak to you, as always. Thank you so much for joining us. Estelle Brachlianoff, they're the CEO of Veolia, with some very strong results today. Now, U.S. companies announced the most job cuts for any October in more than 2 decades as artificial intelligence reshapes industries and cost-cutting accelerates. That's according to data from outplacement firm challenger Grain Christmas. Now, companies last month announced 153,000 job cuts, nearly triple the number during the same month last year, and driven by the technology and warehousing sectors. It's the most for any October since 2003, when the advent of cell phones was similarly disruptive. That's according to Andy Challenger, the company's chief revenue officer. Now, coming up, taking a cautious approach, the Bank of England announces its latest rate decision today. We'll have a preview next, and this is Bloomberg.
What we've seen actually over the past few weeks is the seasonal demand is starting to pick up quite strongly. it started a little bit before the summit between President Trump and President Xi, and it seems to continue now. So I think for as far as the next 6 months are concerned, we expect still quite a resilient demand into North America, with goods starting now to pick up pace compared to what we have seen in the last couple of quarters.
Well, that was, of course, the chief executive of Maersk, a bellwether for global trade, and shares are firmly in the red after some underwhelming guidance. Now, the Bank of England will likely keep interest rates on hold today at 4%, ending a run of quarterly reductions. This as Governor Andrew Bailey takes a cautious approach ahead of the government's crucial autumn budget and inflation elevated. For more on this, Bloomberg's Lizzie Burden joins us now with a preview. Lizzie, I mean, if you set us up, nothing's a done deal. So we're expecting no change, but actually they could surprise us.
Totally, and a surprise cut is what economists at Barclays, Goldman Sachs and Nomura are expecting. Even if they hold rates, it could be a very tight vote split. 6-3 is the consensus expectation, but some are saying this could hinge on the governor because we are inching towards neutral interest rates here. We don't know where that is. Most economists tell us it's about 3%, and the closer we get, the more slowly and carefully the Monetary Policy Committee is likely to want to proceed. Also, of course, we've got the budget coming on November the 26th, and the MPC is likely to want to see what's in there before they make monetary policy around it. But because of the budget, it means that the updated forecasts today are somewhat moot. The expectation being that they're going to downgrade the inflation forecast for this year and next compared to back in August, and keep the growth and unemployment forecasts the same. But we'll watch out for those. I'm really looking forward to hearing what the governor has to say about the Chancellor and her budget, because you'll remember back on Tuesday, she was saying that the BOE having interest rates at 4% is constraining business borrowing. Some have said that that's Trump-esque, and I wonder if there'll be shots fired back the other way from Threadneedle Street to Downing Street.
So what will we focus on the press conference?
Well, apart from that, Francine, of course, if they hold rates, the big question remains, when are they going to cut again? How long is the hold going to last? And for answers, clues to that, I'd be looking very carefully at how the governor characterises that 3.8% inflation read that we had on CPI the last time. It's lower than the Bank of England had forecast. It's lower than the consensus had been, and yet it's nearly 2 times the BOE's target. So how do they talk about that? Because the last time they dropped some pretty hawkish hints. Remember, they were talking about food price inflation, they were talking about inflation expectations. If the communications today are dovish, or indeed if they cut rates, you could see that continued outperformance for gilt that we saw all the way through October.
Lizzie, thanks so much. Lizzie Burden there with the very latest, of course, on what we can expect from the Bank of England and that rate decision, 12 p.m. London time, followed by the Governor's news conference at 12:30. Lizzie will be presenting our special coverage from 12:15. Now let's bring in Jari, Stehn, Chief European Economist at Goldman. Jari, you're a bit of an outlier because you're actually expecting a cut from the Bank of England today. Run us through that.
That's right. We think a cut is the more likely outcome today, really because the recent data has been softer. When you look at inflation, wages, when you look at the unemployment rate, even some of the growth numbers, they are running below the August projections by the MPC. Also, I think it's pretty clear at this point that the budget is going to be quite contractionary. And they're saying they are on a gradual and careful path. They're data dependent. So I think the case really is the data's been weaker, and therefore I think the case is there for a cut. Now, at the same time, we do think this is going to be close, and of course a hold is quite possible, essentially because you could say we want to see a bit more data, we want to see the details of the budget. So those are the arguments against. But I would say that I think the decision is going to be closer than market pricing would suggest, and also closer than the consensus, which, as you say, is pretty firmly towards a hold today. So it should be pretty interesting.
Jari, what are you expecting actually in that budget? Because it could be a big gamble to cut today, depending on what inflation does because of that budget November 26th.
Right, but I think the broad contours of the budget now seem pretty clear. There's a large shortfall relative to the fiscal rules. The fiscal rules are non-negotiable. we think the shortfall is in the order of 30 billion. There's been a lot of signaling towards tax increases, and I think signaling towards non-inflationary tax increases. That is something the Chancellor has, I think, underscored in recent comments. So from a macroeconomic perspective, I think it's pretty clear that it's going to be a contractionary budget, one that will slow growth, and it could even help a little bit in getting inflation down if we, for example, have some relief on energy taxes. So, of course, as of today, this is still uncertain, but I do think we have a pretty good expectation of where this is headed, and I would expect that expectation to play some role today in the deliberations by the MPC.
Jari, when are you expecting a clear downtrend in the inflation data? I mean, this is one, if they wait today, it's because maybe the Bank of England just want to make sure that it's going in the right direction. A couple of weeks ago, many economists thought that was April of next year. Could that be brought forward to at least January or February?
I think so. I mean, clearly the levels here of inflation are high and are too high, but we do think that there's going to be significant progress in coming months. Food inflation, for example, has turned out quite a bit lower than they thought. They've put a lot of weight on that. For example, on rent inflation, we think there are signs that we're going to see some cooling in coming months when we look at alternative data. And then also on the wage front, on the pay front, we've actually seen a good amount of slowing. And again, the pay numbers have surprised them to the downside. And we do think that's going to be helpful for forecasting wage-sensitive services inflation. So we do think that inflation will cool in coming months. It's of course hard to have a really strong view on the sort of month-over-month dynamics of that. But over the next 3 to 6 months, we have a significant cooling in our forecast, and therefore more Bank of England rate cuts.
Jari, I mean, going forward, I guess beyond the data, there are some financial market variables. Are they different to the last MPR that we had? Are they materially different to what we had, for example, in the August projection for their expectations?
Not massively, I would say. I mean, of course, you've seen movements in energy prices, but you've also seen, some movement in the yield curve. But I think the most important change, really, relative to August, is that we've seen these downside surprises. Services inflation running 35 basis points below what they thought. Pay growth running around a similar amount below what they thought. The unemployment rate went up 1/10 more than they thought. So I think there's enough there in terms of the data to put some downward pressure on the near-term forecast. So we do think that both growth and inflation in their forecast will come down a bit. And then the big question is that enough, particularly for Governor Bailey, who is most likely going to be the deciding voter here, or do they want to wait for more information? You obviously always learn more by waiting. But, as I said, I think the data that we've seen, I think, is enough to make a case to cut today and to remain on this gradual and careful path that they have been talking about.
Jari, when you look at the budget, so the baseline is that there's basically a £35 billion hole to fill, which will probably predominantly be done through tax hikes over the next 5 years. But the type of tax that is increased changes a whole lot for the MPC. So do you have an indication of where you think they will touch taxes?
Yeah, I think what's there are a few things that I think are very likely. So, for example, the extension of the freeze on income tax rates, that I think is highly likely. That raises 10 billion. So I think that's something they're going to do. There's also gambling taxes, tax avoidance measures, and so on. So I think there's sort of some things that are highly likely that maybe raise sort of half of the shortfall that you talked about. And then the question really is, how do you cover that other half? And I think there are basically two approaches. One would be to look at a series of smaller changes, maybe related to council tax, pensions, and so on. Or you make a bigger shift and you raise income tax, where, of course, you have a much bigger tax base. So the effectiveness of raising these rates only slightly will give you a lot of revenue. That's sort of the advantage of doing that. But at the same time, of course, it would run against the election manifesto. And so this ultimately boils down to a difficult political decision. I'm not sure that from an economic perspective that matters a ton. I think, we have so-called multipliers from the OBR for tax changes that are sort of roughly 0.3. But ultimately, I think the timing will be very important. Are these tax increases going to kick in quickly? In that case, it will matter potentially quite a lot for growth and the bank over the next year or two, or are these more backloaded changes? So I think that's something that we will be very focused on.
Jari, we had the story today, and I know that there's still a government shutdown in the U.S., so this is basically private data, and it's data by Challenger Grain Christmas, which is an outplacement firm. But they basically say that because of the AI revolution, U.S. companies had laid off more workers in October than in the last 20 years. What kind of data are you looking at to see the displacement of jobs in Europe? Is there a worry that we're miscounting it, that we're discounting it, and that it will creep up on us all of a sudden?
I think that's possible, but we would ultimately be a little bit skeptical here that I think this is going to ultimately have a significant effect on jobs and labor markets, but we think this is going to take some time, particularly in Europe, where we think AI adoption and displacement of jobs through AI is going to be a slower process than in the US. So, where we're seeing more evidence is really on the investment side. That is something, for example, the ECB flagged last week that's coming out of their corporate telephone survey, that you are seeing some support to investment, kind of, digital AI-related investment that's having some positive effect on growth at the moment. I think this is where we probably see the effects first, and the labor market effects, I think particularly in Europe, will take a bit of time to come through.
Thank you so much, Jari. As always, Jari Stehn, Goldman Sachs chief European economist. Now, Commerzbank has raised its outlook for full-year lending income after reporting third-quarter profit that fell short of estimates. The shares are edging lower this morning. The chief executive is under pressure to show that her strategy of boosting profitability and shareholder payouts is sustainable as she continues to fend off UniCredit's takeover bid. Well, Bettina Orlopp told Bloomberg that the bank's in a strong position.
If you look on our results, it has been a record operating result for the first 9 months, and very much driven by growth and then leading to a higher profitability. And growth stems from two factors. One is our lending growth, 13% in corporates, but also the net commission income growth.
Now let's also bring you a Bloomberg scoop. And SoftBank explored a potential takeover of U.S. chipmaker Marvell Technology earlier this year. That's according to people familiar with the matter, in what would have been the semiconductor industry's largest ever deal. Now, the Japanese conglomerate's billionaire founder, Masayoshi Son, has been studying Marvell as a possible target on and off years. It's part of his efforts to bet on hardware that can benefit from the artificial intelligence boom. Coming up, Novonesis, of course, shares jumping after updates its full-year guidance. We'll be speaking to the chief executive next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Well, tariff uncertainty set to drag on for months as the U.S. Supreme Court signals that it's skeptical about President Trump's use of emergency laws. Now, the Bank of England is expected to hold rates in a split vote this lunchtime, with Governor Andrew Bailey seen as holding the deciding vote. Plus, shares in the enzyme maker Novonesis jump after updating its revenue guidance for the year, and we'll be speaking to the chief executive in just a few minutes. Now, Qualcomm and ARM delivered the latest in tech earnings in a reporting season marked by high investor expectations. ARM shares gaining after the chip designer issued a bullish revenue forecast. For Qualcomm, investors were underwhelmed and its stocks slipping despite delivering an upbeat forecast for its sales and profit. Well, joining us now is Matt Bloxham, senior analyst for Bloomberg Intelligence. Matt, so good to speak to you, and there's really a lot going on in your space. What are the key takeaways from these earnings?
Yeah, I think it's really a sense that the relative expectations for these different companies are set in different positions. You're seeing quite different reactions to the ARM and Qualcomm results. Both beat in the quarter they reported, both gave better than expected outlooks. But I think, the kind of the whisper number, the kind of behind the scenes number that people are thinking of for Qualcomm, perhaps a bit more optimistic. So, encouraging progress, but people looking for a stronger signal about future demand than they were hearing from the company. Whereas I think with ARM, we did get that kind of more qualitative narrative that the company's efforts to kind of expand its kind of scope and breadth of what it's doing, definitely paying dividends and kind of ticking boxes across everything that people are looking for, and going just that little bit further in terms of the guidance.
Matt, I also know that Apple is nearing this deal to pay Google about $1 billion a year for an AI model to power Siri. What does this actually mean for Apple?
I think hopefully it's the start of the beginning of the end of the AI saga. Yeah, exactly. I mean, this would be a significant upgrade. I think it's something like a 1.2 trillion parameter model. Currently, Siri is working on a 150 billion parameter model, so a real significant upgrade. And I think it's going to take a bit of time for this to kind of actually get implemented into Siri. But hopefully it will kind of really show in the capability of that product and really close the gap in terms of what the Apple ecosystem's offering to its customers versus what you can get from Google Direct or Meta or somewhere else. So this has been playing out almost in slow motion for Apple. They've done some big internal changes to their kind of their team and their focus. So I don't think it's a big surprise to anybody, but it's encouraging that actually kind of making progress on that deal. And I think most people would think that a partnership with Google on this is the right path for them to take.
And then the FT actually got a big interview with Jensen Huang, and he said that China will beat the U.S. in the AI race. I mean, why did he say that?
Yeah, I mean, I think, any CEO says something with a kind of clear motivation to it there. I mean, he's got a $5 trillion business riding on the excess of a kind of largely US-driven AI revolution. There's a lot of friction in the US right now around building new data centers, where you get the power from, how you train models, and whether they can kind of just take copyrighted material or not. There's all sorts of things going on there, and clearly he kind of wants to make sure that his kind of platform, if you like, from a US perspective, is giving him and all of his customers enough runway and flexibility to kind of really make the progress they want to stay ahead of China.
Matt, we also have this story, actually, the AI revolution has prompted more October U.S. layoffs than in over 20 years. I mean, this is really getting a lot of readership as we try and figure out what it means. Yeah. This is from the outplacement firm Challenger Grant Christmas. But what do you make of this? I mean, it feels really significant.
Yeah, I think personally we probably need to be a little bit careful about how directly we link job losses to AI. I think clearly there is some stuff going on, but I think the narrative is a lot more complex for a lot of companies. We've seen this with Meta. Meta laid off 600 people in one part of the AI division, but hired a bunch more in a different division. And so I think there is to some degree a bit of a skills shifting going on here. There are clearly kind of other issues going on in the economy more broadly. And I think a lot of companies in the near term are actually hiring more people to kind of build out their AI capabilities than they're firing. So I think we'll have to kind of parse those numbers quite carefully to kind of really see what's really going on.
Yeah, always caution. Matt, thank you so much. As always, Matt Bloxham there from Bloomberg Intelligence. Now, Novonesis is one of the biggest gainers on the stock 600 after it updated its guidance for the year. Now, the president and chief executive, Esther Baiget, joins us now. Thank you, as ever, for giving us a little bit of your very busy schedule. Esther, look, your shares are getting some 6.2% after third quarter earnings and your update on guidance. How comfortable are you that this will be achieved?
Thank you, Francine, for also giving us time here and the beautiful question. We are in a good place. We feel in a good place, in a place of comfort. With 9 months, strong 9 months behind us and delivering on our promises with 8% growth, profitable growth, 37.3 adjusted EBITDA margin. And it's more probably what gives comfort is the quality and the robustness of that growth. It's growth mainly on volume and on price, 1% on price. It's growth across all segments. It's round growth, diverse across the whole company. It's growth across all geographies with 12% growth on emerging geographies. It's growth from innovation, 20%, more than 20% of our revenue comes from products less than 5-year growth. It's growth from synergies, showing that we're delivering on the promises on the integration. It's a robust growth that shows the strength of our business model, and it gives us comfort of the underlying also growing demand for our solutions. These 9 months, coupled also with a little bit of timing in Q3, puts us in a place that we lift the low end of our guidance, and we move from 6 to 8 to 7 to 8, also indicating a mid-single-digit growth for the year, while maintaining the EBITDA guidance, embracing also the stronger headwinds from currency that we envisioned at the beginning of the year. So good place, place of comfort, and committed for the long-term future also.
You really updated, Esther, in terms of the 2030 targets that you introduced back in August, and there are two main, things to that. First of all, it's organic sales, 6 to 8% through 2030, seen as ambitious but achievable. EBITDA, I think 39% by 2030, and this is generally seen as conservative. So would you be able to exceed this, you think?
I would like you to repeat yourself. I would invite you to repeat 6 to 9% CAGR and 39% EBITDA margin at the end of the period. And then please, cautiousness, the word of conservative. I would call it ambitious. I would call it bold. I would say this is the commitment that we bring in to continue to drive volume growth. That's how we win, enabling value generation and value growth for our customers, both in developed and emerging geographies, staying very close. And we do this because we continue to invest. A little bit of the growth that we're seeing today, a big portion of the growth, it's collecting the fruits of the investment of the past. Growth on emerging geographies, growth from innovation, and we're going to continue to invest also for the strategic period, because there is a future also after 2030, and that's what's driving also the 39%, the commitment to long-term growth that we will continue to deliver.
Yeah, obviously that was not my judgment, it was analysts. But Esther, you produce enzymes for vegan products, right? How much are you seeing a change in demand for that?
What we see a change on the consumer demand, it's a little bit broader than plant-based or vegan. It is seeking for the feature of healthiness without compromising taste, texture, palatability, and cost for the consumers. And that's exactly what the enzymes and the cultures and our bio-based solutions bring in. They enable our customers to produce high-protein yogurts without compromising the taste and texture, and bringing clean label with bioprotective cultures and enzymes that bring that palatability while bringing also competitiveness. And respond to increasing growth that we see in consumers, not only linked to GLP-1 and a higher muscle weight, but also elderly population who's seeking for higher protein content solutions. We see the pull for solutions for cleaner label, replacing non-wanted items that bring a functionalization that we bring now with enzymes. We see the pull, and we bring with solutions on innovation on how to reduce sugar more than 50%. So reduce the amount of sugar added without compromising the taste, leaving both cost savings, but at the same time, differentiated value propositions for our customers. That's the space that we see the momentum across all segments in food, and again, where we play very close with our customers, and we continue to invest.
I mean, it was really interesting hearing you talk about protein yogurts. Is there anything else in terms of emerging trends in food that you think you will be pursuing in the future? The evolution of the consumers from the joy on eating plus seeking for additional value proposition. It's not only tasting good, it's also what else can it bring? Can it bring gut health? Can it bring an additional feature that when I have the joy experience of eating this good, I also have other value propositions. And here we're working also, this is more longer for the longer term, but we're working on our customers on how we bring high value protein that provide a given boost added feature functionalization, how we bring also probiotics and the combination of enzymes and cultures that will double up the joy experience when we consume, not only to the nutritional value, but to the health component, boost health component that those nutrients will have. Esther, as always, thanks so much for joining us. Esther Baiget, President and Chief Executive Officer of Novonesis. Now, Rheinmetall has recorded a slightly lower operating margin in the last 9 months. This as the German defense giant prepares for significantly delayed major orders from its home country and other EU states. The Chief Executive spoke to us following the results.
The relationship that we have with the American big companies is a really good one. It's a very trustful relationship that we have, especially also with Lockheed, but not only with Lockheed. So as you know, we have cooperation agreements with Anduril. We are on the way to speak with Raytheon. Because we step in now also into the naval side, so it's excellent. It's fast and it's very, very trustful. So we are able to pick up usually from the German side 40 to 50% of the budget of the German budget, and I always calculate that there should be a possibility that between 25 and 30% of the European NATO budget Rheinmetall is able to pick up. So it's a lot.
Armin, can I ask you what is standing in the way of your business expanding faster? I appreciate that you are expanding very quickly, but is there anything blocking your ability to step up as quickly as you want to?
At the moment, not. We get the permissions, and I get the permissions in weeks at the moment to build up everything. For sure, we need production lines, as I told before. We have to go to automation, otherwise it will be not possible to produce as much. In some areas we are ready. I see at the moment no obstacles.
Well, that was Armin Papargao, the Chief Executive Officer of Rheinmetall, speaking with Bloomberg. Now, AstraZeneca's profit rose more than analysts anticipated last quarter, buoyed by sales of its blockbuster cancer and diabetes drug. The company also reiterated its guidance for the year. Bloomberg's Charles Campbell is here with the very latest. Charles, good morning. Look, a good set of results for a company that's in a pretty interesting corporate position.
Yeah, absolutely. A really good set of results. Core EPS, operating profit, revenues, they all beat expectations. They maintained guidance. They also said that they're on track to meet their target for $80 billion of revenue by 2030. But the crucial thing is it's a strong quarter on top of a series of very strong quarters and years. And it is as part of Pascal Soriot's transformation of the Swedish-British drugs company into something which is a little bit more global, into something which has a very strong US focus and which is really focusing on these cancer drugs, which is really driving the revenues. One interesting point is Enhertu, which is one of their newer drugs. They far exceeded their revenue estimates. So that seems to be a possible driver of growth in the future for the company.
What does it tell us about the relationship with both the US and the UK?
Well, look, one standout statistic was that 40% of their revenue in this quarter came from the United States. Now, that far exceeds any other of their geographies. And AstraZeneca is on a company-wide push towards the US. There was a brilliant profile that published yesterday by our Bloomberg News colleagues saying, pointing out how Pascal Soriot saw the opportunity when President Trump took office. He announced a significant investment in the United States, $50 billion of investment up to 2030 alongside that revenue target, and they are making this push. And it comes alongside as well a listing change in the United States. They changed their ADRs to ordinary shares, which they say will help them access investment from US investors. It will mean that that US investors will be able to buy fully fledged shares. But the outcome of this is also a potential revenue loss for the UK, because the UK charges stamp duty on trading, and if you can buy ordinary shares in the United States, then people buying shares in AstraZeneca on that line will not have to pay stamp duty. So that is estimated to be about £200 million and could be quite significant. So it is also part of a shift away from the UK. And Pascal Soriot this morning on Bloomberg TV, he said that the UK remains their corporate headquarters. They're very happy with their domicile. But what they aren't seeing is it as an investment geography for early-stage drug development. And that, he says, is crucial to the UK turning around its story and starting to become a drug powerhouse once again.
Charles, thank you so much. Charles Capel there with the very latest on some of these drug makers, including AstraZeneca, with earnings out today. Now, coming up, what can be achieved 10 years after the landmark Paris Climate Agreement, while world leaders gather for the COP30 summit in Brazil, and we're live in Belém. That's next, and this is Bloomberg.
Maybe the precautionary approach to regulation of trying to de-risk everything isn't working. Maybe we need to go to a proactionary approach. Maybe we should say, okay, is it possible? I don't know, but I'll come to the suggestion. Is it possible to turn 30,000 pages of regulation that's failing the city and failing our economy into 100 pages of proactionary regulation?
Well, that's Richard Tice, deputy leader of Reform UK, which has just 5 members of parliament but has led national polls for much of the year. Now, speaking at an event hosted by Bloomberg in London, the party spoke of its plans to shake up financial regulation, taxation and pensions in a bid to revive Britain's economy if the party comes to power after the next election due in by 2029. Now, the Young World Summit is concluding today in Munich, a global youth community representing more than 19,000 young people from nearly 200 countries. With the support of leading humanitarian and business leaders, including Queen Rania of Jordan, Richard Branson, the summit tries to find solutions to some of the most pressing issues of our time. Now, this year, young leaders voted to focus on 5 key topics, including the role of the circular economy in tackling the climate crisis and shaping global markets. And talking of which, world leaders are also gathering ahead of COP30, hoping to advance progress on climate change despite growing concerns that multilateral cooperation is on the brink. Well, Bloomberg's Jennifer Luhi is in Belém, Brazil for us. So, Jennifer, what can we actually expect from COP30? And are we expecting to hear today from any world leaders attending the summit?
Right. Well, the official COP30 negotiations actually start Monday here in Belém, but world leaders, heads of state, are coming here in force over the next 2 days to deliver a message of solidarity and commitment and resolve to continue addressing global warming and to keep forging ahead with clean energy and emission-free energy. Even, despite some troubling signs from the climate movement, including, the disappearance really and the erosion of a key goal to keep temperature rise in check and keep it below 1.5 degrees Celsius. A key tipping point. One of the things that we expect to hear leaders talk about really is kind of the concrete benefits of climate action, in the form of jobs and economic opportunity. And again, that's, something they're seeing as a really important message as some countries pull back from their climate commitments, as the U.S., of course, withdraws from the Paris Agreement, and as you see some companies scaling back their own net zero pledges.
So what are going to be the main sticky points?
Finance is always a big issue at COPs. Delivering the $1.3 trillion that countries pledged last year that they would send to developing countries over the coming years annually. That's a challenge. The financial flows to developing countries are seen as a way of unlocking climate action in these poorer and developing nations. And so figuring out a way to get that money flowing is always a tension point and will be over the next 2 weeks. We're also expecting a potential fight over unilateral trade actions, such as the European Union's carbon border adjustment mechanism. Some developing nations, India, Brazil, have chafed at those in the past, and we could see some friction around that issue at the start of the conference as negotiators work to develop an agenda for the talks.
So, it's very notable, Jennifer, that many of the big polluters are not attending. Does it mean that they are just doing less, or that they didn't want to upset, Donald Trump and his administration?
Right. Some of the world's biggest polluters, like you said, are not going to be here represented at the Leaders Summit. Narendra Modi of India, Xi Jinping of China, and of course U.S. President Donald Trump, who's really scorned the entire process and derided climate action as a scam. They won't be here addressing the COP. We're only going to see about 60 heads of state over the next 2 days, which is fairly lackluster attendance compared to some previous blockbuster years. But at the same time, we're also expecting to see quite a number of European leaders. They're coming out in force. That includes the EU Commission's Ursula von der Leyen, Germany's Chancellor Maersk, and France's Macron, who will all be speaking over the next 2 days. And from the U.S., you're seeing some mayors and governors show up to kind of deliver a message that the U.S. is still in the climate fight, even as Donald Trump pulls the U.S. out of the Paris Agreement. That includes California Governor Gavin Newsom, who's a potential Democratic presidential candidate. He'll be coming here next week to deliver a message that climate action is the economic opportunity of our time, and that it delivers jobs and economic benefits that the world and California and the U.S. can't afford to forego.
Jennifer, thank you so much. As always, Jennifer Luhi there in Belém. Now, the Bank of England expected to keep interest rates on hold later today at 4%, ending a run of quarterly restrictions, although it may be a very, very close call, and we may be surprised. Don't miss our interview with the Bank of England Governor Andrew Bailey. That's at 4 p.m. London time. Let's also bring Ven Ram, our currency and rate strategist from M-Line. Ven, do you feel, good morning first of all, but do you feel like this Bank of England is actually closer than we let on?
Morning, Francine. Thank you for having me on. I think that, it is going to be a lot closer than the markets are implying. The markets are factoring in 20% chance of a rate cut, but I think it's going to be a lot closer than that. The Bank of England is keen to accommodate the economy, which is growing below trend. And we got the emphasis in Chancellor Rachel Reeves' speech earlier this week, where she clearly outlined that her focus is going to be getting inflation under control. So if the budget is going to be contractionary, then I think that there is a good case for the Bank of England to be cutting rates. But the key question for investors is whether they will do so today or later next year, probably in February. And I think that the balance of risks between inflation and the outlook for the economy suggests that they will probably hold rates today simply because inflation has been a lot sticky. It's still almost twice the target, the BOE's target. So I think that the hawks on the policy committee will want to see more proof, more convincing evidence that inflation is indeed slowing. We have lost the disinflationary momentum that we saw early in the year. That's completely stalled. So I think they will want to see more proof. So I think on the balance of risks, I think they may just hold today.
Ven, what's your outlook for the pound?
Well, I think that the pound is lacking any constructive drivers to drive it higher from here. And I think that, there's going to be a mild risk premium on the pound until the budget contours are known. And I think that, much of what we saw with the pound earlier this year, it surged 10% in the first half of the year. And I think that was broadly a reflection of investors adding a risk premium to the dollar rather than a reflection of pound strength. And I think that what we have seen happen in recent days is that pound giving back some of that earlier strength. And I think that it'll continue to tread water for the time being.
So interesting. Ven, as always, thank you so much. Ven Ram from Bloomberg's M-Live team in Dubai. You can also read all of his analysis on the website and on our Bloomberg terminal. As a reminder, Bank of England's rate decision, 12 p.m., followed by the governor's news conference at 12:30 p.m. We'll have special coverage starting 15 minutes before that. Up next, Bloomberg Brief, and this is Bloomberg.